get some more perspective on the markets and perhaps where there might be some opportunities. For that, Jay Bala is joining us. He is a partner and portfolio manager at AIP Asset Management. Jay, nice to be able to catch up with you again and see you. Thanks for joining us.
Oh, no problem. Thanks for having me on.
Thank you. I do first want to get your take in terms of when you look at the market, and you're so specific in terms of the areas and the niche areas that you play in. Maybe just give us an update in terms of what those areas look like today and how favorable they are for you.
Sure. Obviously our niche area always has been, at least from a fund perspective, has been that private debt or convertible private debt to small cap companies. And, a lot of those sectors have been beaten down, and for the past year, obviously there's been a significant shift in the market. For the past, call it 6 to 12 months, it's all been about COVID. So everything that was pro-COVID had rallied, and everything that was not COVID, call it real estate, travel, to oil, to cannabis, to anything else, has pretty much sold off. And what we're seeing, I guess, is basically two things that have significantly changed that momentum. One was the big announcement by Pfizer coming out and saying, we've got a vaccine, it's 90% effective, it's phase 3, and, it can be deployed relatively soon, which I think has caused a huge shift in the way the market is now perceiving risk and looking at what is growth. Because if you looked at it previously, what was, considered growth was anything COVID related. Right now, I think you're going back to sort of a traditional idea of growth, meaning, you're looking at the real economy, and that's basically, I guess, more realistic and more sort of long-term growth focused. So, we're seeing a bunch of trends that are really working out well for particularly beaten down sectors. You've seen oil rally on the news, you've seen some travel stocks rally on the news, and I think with the U.S. election has caused another sort of rift, which is, you've also seen a lot of momentum and interest coming back into the cannabis market, which has also been a very interesting sector for people to follow.
Mm-hmm. Jay, I wonder, though, with some of the economic damage that has been done because of the COVID-19 pandemic, talk to us a little bit about some of the areas, some of the sectors and industries that perhaps you feel, and maybe you have debt in some of those areas, that you feel have been really damaged and might not come back. Are you seeing those cases?
Yeah, might not come back. I think a lot of that really has been going on for a while. So if you look at, the retail business, Amazon was winning in that business for a long time. COVID basically made it even worse for, call it, mom and pop shops and the retail sector. And, obviously that's probably not going to come back in the same way. Whereas a lot of the other traditional industries like travel, I think to some degree oil, I think you're going to see some kind of normalization kind of in the next 12 to 18 months, because at the end of the day, those are real world economies. I don't think people are going to stop traveling. I don't think people are going to stop driving their cars. I don't think people are going to fly in planes. So, a lot of that's going to come back as well. I think the key one that everybody's worried about, just maybe at an institutional level, is, I guess, office-related real estate. Will people still come back to work in the same way? Which is going to be something that we're closely monitoring and would be very, very interesting to see going forward.
And Jay, from an investment perspective then right now, where are you finding some specific opportunities? And you mentioned cannabis. What do you think of owning some of the cannabis companies these days?
Yeah, look, I think cannabis has been beaten down as a sector. I think, a lot of the smaller, weaker players have been pushed out of the market. And so, I think this resurgence could be very interesting for, I guess, Canadian cannabis stocks in particular. If you look at it, look, the U.S. is the single largest cannabis market. Even any concept that, they may be a movement towards legalization is going to cause a large rally in these cannabis stocks. So whether you're going to invest in them more as a trade, or whether you're looking at this saying strategically, look, there's Canadian companies here that already have the assets and the manufacturing capability. Once they legalize, are they able to transport those goods down to the U.S.? and that would already give them sort of a head start in terms of managing these products, because they've already got some level of experience selling these products in the market here. I think those particularly select companies could do incredibly well if there is an actual legalization event in the U.S.
And from a small cap, almost special situations perspective, what looks interesting to you in Canada these days?
Yeah, I mean, because of the nature of our fund, I mean, we privately negotiate our convertible debt with these companies. So, we are in discussions with a number of them. However, we cannot really discuss names until we've actually completed the transaction and press released it. But there are a number of small
Are you finding? Yeah. Are you finding a lot of opportunities because of the impact that the COVID-19 has had, and obviously you would then do the homework and make sure that the company is going to be solid and a going concern, correct?
Correct. So, I mean, look, we're seeing a lot of value in a couple of sectors, so cannabis being one. The oil sector is actually going through their own trials and tribulations. So what we're seeing is a lot of sort of recapitalizations. The banks had obviously lent a lot of these companies money, call it a year or two ago when oil was hot and much higher. A lot of those companies are coming, a lot of those banks are now coming to these smaller oil and gas players and saying, you owe us, $50, $80 million in debt. We'd like you to reduce your line by $30, $40 million. And, these companies really can't come up with the cash. So, we're also seeing a valid transition there. So, we're seeing a lot of opportunity there where you've got a lot of healthy businesses. They just can't come up with that kind of cash that quick. And we're also seeing some level of interest in the U.S. with regards to, I guess, a lot of hotels. A lot of hotels are selling off at very large discounts in the U.S. But again, we're doing our due diligence. And we're looking at a number of opportunities, but a lot of these opportunities look very promising going forward.
Jay, what do you make then of, when you talk about a number of the U.S. hotels being sold off? Obviously, we have great Canadian gaming here in Canada getting an offer from Apollo Group, one of the largest private equity players. What's your view of that? I'm just kind of curious.
Oh, just on that one specific deal?
Yeah. I'm sure when you saw the news, you had an opinion.
I mean, I guess that's a bit of a storied issue. I mean, it's a company that was owned, I guess, predominantly by, I think, Catalyst for a period of time, and now it's being sold to another private equity player, which is Apollo. I mean, look, at the end of the day, it's probably a reasonable acquisition if, and again, I haven't studied it incredibly closely, but it's probably a reasonable acquisition on the basis that you think that there's going to be normalization. I mean, like this will all work so long as the vaccine works out and people go rushing back to the casinos, right? Otherwise, you're going to have to wait it out. It's kind of the same thing as the hotel business. It's, how long are you willing to pay or absorb negative cash flow until you get normality, right?
Right. Jay, nice to see you. And I see that you're in your office. It looks excellent. Does it feel great?
I am. All right. Thanks so much.
Thanks so much. That's Jay Bala. He's the portfolio manager over at AIP Asset Management.